Hi, so I wanted to make this video today to explain some of the misconceptions around cash flow in a business. And I'm going to use this wonderful drawing as an example. So here we have a ship, which is your business, and it is loaded with some costs as cargo, which is your overheads, it's your rent, your vehicles, that kind of thing. And it's moving towards this point here, which is where it's going to run aground. Now, quite often this is payroll at the end of the month, because that's quite often one of the biggest bills in the business. £50,000, £100,000, all out in one go. It's where businesses tend to run aground. Now, as we're looking at this and we can tell that we're running into danger. There's a couple of things that people instinctively want to do. Firstly is take the top off this so that we can get past it, which is losing team members. That's not always a good long-term strategy. The other thing they might do is they might think about the costs that are in here, the cargo that's in the boat, and by reducing the amount of cargo, hence lift the boat up so it will get over there. So we start cutting costs in the business. Now, that will definitely help, but it doesn't always give you the answer that you're looking for, just cutting costs out of the P&L, because you're looking at it at a two-dimensional level, really, in a P&L perspective, which is actually theoretical. Because in the real world, of course, money moves in and out and it ebbs and flows. If it was just as simple as reduce costs, then this wouldn't be a picture of a boat, it would be a car. That would be a speed bump, and the car would have got enough space to get over the speed bump. But there's more factors involved here. So, of course, sometimes the sea is stormy, the ebb and flow, so the sea will actually sometimes be like that. So even though we've lightened the load of the boat here, it still might hit because of the ebb and flow of money in the business. So this is the ebb and flow of debtors and creditors in the business. So you're looking at who you're paying out and when you're getting your money in. And if you get your money in slow and you pay out too early, you're going to get this going on. If you can hold on to your money as long as it's ethical and you get paid quickly, you're going to get this going on, which of course means you might not have had to have lost those overheads, which might have been your marketing budget, which is really important. But there's still some other things at play. Thinking about the tide here. So putting cash flow positive sales into the business will raise the tide, and maybe without losing those costs, if you do need them in the business, you won't get over that tricky bit. Also, work in progress. If you're doing work that you're not immediately invoicing for, that will mean it's like a lowering of the tide. You'll run out of cash faster. If you can move from a monthly billing to a fortnightly billing with a client, it's like the tide has just raised. Also about inventory. If you're sitting on lots of inventory and you over-order on inventory and you have now more stock in your stock room, which is cash, the tide goes down, and even though you might have lost some of those overheads, you're still going to run aground. But the other way around as well, importantly, if you can get your inventory down by 10 or 20%, it's like the tide has risen and you might not need to lose those overheads. Now, it's important to check your overheads and make sure that you are really efficient and, of course, get rid of stuff that you don't need. But quite often the overheads that people get rid of are things like their marketing budget and things like that, which actually has then a knock-on effect going on into the business. So when you are looking at cash flow, please don't just look at overheads, please look at the whole thing. You've got your WIP, your work in progress, and you've got your inventory. You've got increasing sales. Both of those things will rise the tide. And the other thing is the ebb and flow of money in the business is getting on top of your debtors and your creditors to make sure that you're a really cash efficient business. So unfortunately, it's not just as simple as going through your overheads and cutting some money. I hope you found that useful. Please put some comments in. I'd love to know that you found it useful and any thoughts on that. Thank you.